An equity investor's view of China. Now this is thoughtful. Hello, I'm Trevor Lai in Shanghai. Usually on our show, we look at building brands and consumer trends from the marketer's point of view. This week on Thoughtful China, we're taking a different approach by talking with Harry Xu, the founder and managing director of ClearVue Partners, a private equity firm investing in China's consumer sectors. Collectively, the partners and team at ClearVue have made over 25 investments in China during the last 10 years, worth over $100 million in investment value. Previously, he was the chief marketing officer for PepsiCo in Greater China. Before that, he was an entertainment leader in Asia, first as managing director of MTV's operations in Greater China and Korea, and later as the president of the world's largest music company, Universal Music, in Southeast Asia. Harry, thanks for joining us today.
Good morning.
Tell us about some of ClearVue's investments in China so far, some of the companies you've invested in already, and some of the categories that you're focused on.
ClearVue Partners is a very, very active, hands-on manager from a private equity investor's point of view. We believe that our value add to entrepreneurs is much more about not only giving them capital to grow and scale, but also the network of relationships that we have around the world, and also the operating experiences that we've had over the last 60 years of collective experiences that we've had in China. And lastly, I think it's also about bringing to them a set of not only local knowledge, pan-regional understanding, and also a set of global best practices that our team has acquired over the last 60 years collectively.
How is it different working with Chinese entrepreneurs than entrepreneurs that perhaps built businesses in North America or Europe?
I think Chinese entrepreneurs are, first of all, really hungry and very, very hardworking. I mean, really, the last 30 years of economic growth in this country has presented so much wealth creation opportunities that the Chinese entrepreneurs are, first of all, extremely adaptive. They're quick to respond, and they're fiercely competitive. So I think in that sense, you have to really stay very, very close to the action.
Was it challenging to have to rewire yourself from a marketing perspective to an investment perspective?
I get asked that question a lot, actually. People say, well, how did you go from entertainment to marketing and then now investing? The truth of the matter is, actually, I've been an investor as an angel and venture investor for more than the last 10 years. Personally, I've done a number of deals, and luckily, some of them have turned out okay. But the transition actually is not that difficult. I think it's all about analyzing the key metrics, the dashboards and the KPIs of certain businesses, and then asking yourself the critical question of, well, first of all, is this the type of people or the management team that I would back? Second of all, is this a category that's going to continue to grow, or are they swimming uphill and doing very, very well in a declining industry? And then the other metrics would be, are the margins sustainable? Is this business going to get to a point where there's going to be a meaningful exit? So the transition for me has not really been as difficult as I say. When I was at Universal Music, every year I would have to look at all of Asia and decide which genre of music I would have to sign, and then allocate the capital that we had to back a certain manager that had signed a certain artist in a genre that was very, very popular on the charts. When I was in marketing, every year we would have to look at a portfolio of beverages and decide which categories are going to make it, and then decide which are the key priorities that our company would launch. So it's really all about asset allocation, picking the winners, and hopefully that you have a better winning versus a failure rate.
And you're obviously able to offer more marketing insight for your entrepreneurs than perhaps a purely financial investor, and therefore be able to balance more of a different perspective when there's a conflict, whether it's with the board or the other investors and they're looking at a marketing plan or marketing campaign. Have you ever had to sort of go to bat for one of your companies from a marketing perspective, versus a purely financial perspective?
One of the most common mistakes that we've seen with companies after they raise a lot of capital is that they go out and splash the money all over the media. And in their minds, they're actually building a brand. But what we've really actually seen is that a lot of them have really just generated short-term transactions. So they really haven't either built brand equity or really developed a loyal user base. Now, they may fool themselves and say, well, I've got a certain repeat purchase rate, et cetera, et cetera. But really, when you look at it from a longer-term perspective, they really haven't moved the dial. They haven't really built the brand. So in this perspective, we believe our firm has a unique value add to the companies that we invest in in that we really do believe that we can accelerate or perhaps help them to be more effective in how they deploy their capital.
So it's very interesting that you mentioned that, because there's always this dichotomy between the appearance of growth and the appearance of progress in China, which there seems to be a lot of emphasis on in the media. So they take a lot of big numbers, usually, slightly inflated or overstated numbers, and you use that as a banner for the progress that their company's making. But it sounds like ClearVue's really focused on the fundamentals and taking a more long-term view of their investments. At the same time, a lot of times investments are framed in a 3 to 5 year period. Do you believe that in China this time frame is short-term, or is that long-term because of the speed of the way things change in China?
ClearVue Partners is a typical private equity investment horizon of 5 plus 5 years. Our focus is to work with growth companies with revenues between $20 to $250 million that are profitable. And so it's hard to say whether it's a short or long-term investment horizon, because it's really hard to cut the line of when the bone ends and the flesh begins. And so therefore, it's really in this time horizon that we want to accelerate the growth and take it to the next phase of growth so that it has a meaningful exit.
And you mentioned earlier that you've made a lot of personal investments over the last 10 years. And given how much China has changed, I'm sure it's surprised even some of the savviest investors. If you could turn back time and look back at some of the earlier decisions or some of the trends that have taken hold in the country since you started investing, is there anything you would have done differently?
That's a great question. ClearVue Partners believes that really good research will lead us to a better place as far as our investment thesis is concerned. So if we knew what we knew 10 years ago and extrapolated to what the consumer would look like in 2020, I think some of the macro trends are very, very clear and well documented. So they are urbanization, an aging population, a desire for modernity that's inspired by tradition. You have an incredibly digitized consumer base, so they're really in some ways using technology to connect reality and fantasy. So some of these trends would then lead you to say the question of what sort of brands or companies should we be looking for? We would ask the question categorically, does this company offer value or luxury or both? But I wouldn't get stuck in between. The other thing we would ask is this a health and wellness product or an indulgence occasion, or maybe both? But again, I wouldn't get stuck in the middle. Lastly, does this brand offer true authenticity, or is it rooted in a certain tradition, or is it just an undifferentiated name? So what we do like is, what we believe are companies that have those types of characteristics, and they would fit more appropriately into our investment philosophy.
And one of the principles you've said at ClearVue is a focus on insights, guiding your investments. And one of the things you've said about the Chinese consumer is that there's more of a focus now on value rather than pure consumption. Can you talk a little bit more about that and what evidence you see of that shift and that trend?
Well, I think the Chinese consumers are becoming incredibly more and more informed than they have in the past. And I think the last 10 or 15 years of growth has been a lot about, I'll say, closet stocking, closet stuffing. And I think the huge consumption that we've seen in all categories in China has led the consumer to say, well, I now have 4 or 5 pairs of sneakers, I have X number of t-shirts, I have X number of whatever it is that they needed it. Going forward, what will they buy? I think the question they would be is, is this something I really do need in my closet? Because it's not about just filling what was once an empty closet, but it's about really buying a product or services that they actually do need. So what we are seeing is a notion of trading up and trading down. I think you're going to see continual growth in the consumption in the upper end of the segment, but also a lot more value driven.
But is that a trend that's only happening in first and second tier cities, or are you seeing this across the board? Are there real distinctions between those trends between the first and second tier cities and the third and fourth tier cities?
What we're seeing is that the consumption in tier 3 and tier 4 cities is certainly a lot faster than tier 1 and tier 2. We believe that many of the companies that we're seeing are not a proxy for the GDP. In fact, some of the companies that we're investing in now are seeing growth rates of 20 to 30 or 40% in tier 3 and tier 4 cities. So if you pick a category leader, a market leader in that category, and they're outpacing GDP, it's not unusual to see a 30 or 40% growth in these tier 3 and tier 4 cities, and that's what we get excited about.
So speaking of what gets you excited, what are some of the metrics for success that you use now compared to what you're using as a marketer?
I think our firm has a dashboard that we use to track the companies on a regular basis. We look for not only short-term performances, use of cash, return on capital, inventory turns, et cetera, et cetera. So depending on the industry and the category that we're in, we have a developed or customized dashboard that allows us to track the progress of the companies and the investments that we've made.
A recent article in the New York Times described private equity in China with the line, "You can buy in any time you like, but you can never leave."
I think it's a really good reference. I read the article, and I think there's a lot of truth to what was described. Our firm likes to take the approach that any investment that we make would have multiple exit options. We first of all believe that the industries, or we believe that there are certain industries that are going to be primed for consolidation. These industries would typically have the characteristics of high fragmentation, either a regional player that's really, really deep in their penetration into that particular province, or a national player that's very, very well established in one particular category. And so going forward, the cost of entry and cost of competition is going to make it tougher and tougher for these companies. So it will be no surprise, I believe, that going forward there will be more and more M&A opportunities and more consolidations. So we look for multiple exit options, not only from an IPO, potentially a trade sale, and we would also do a lot of structured sellbacks. So essentially some of these investments are built to sell back to the original brand owners.
And do you think the IPO has lost its luster for a lot of companies in China?
I think everything goes in cycles. You know, at the moment, IPO is not a viable exit option. Let's hope that 2013 will be a lot better than 2012. A lot of people are saying that early indications is that the market will be a lot better, with caution.
You're very well known in China's entertainment circles. What's some of your advice to marketers in terms of how to best use celebrities, endorsements, and product placements?
We're seeing that there's a lot of supply and demand imbalance between the number of spokespeople versus the number of brands that are seeking celebrities to endorse them. As a result, some of the common mistakes that we've seen is really a mismatch between the celebrity and the product. This brand incongruency is really something that's going to be very, very confusing for the consumer and not necessarily move the dial on the brand to build their equity. So you would really have to ask yourself the question, if I was a beverage or a snack or a pair of jeans, what would that person look like? What would be characteristics of this individual? What's the color of their hair? What would they be eating or drinking, and so forth? And if it doesn't fit and it's not a perfect, it's not a congruent set of dimensions, it's probably not a good thing. I'm friends with many of these celebrities, and I would say to them, why did you endorse that doorknob? You know, or why did you endorse that particular floor tile? Not that there's anything wrong with those industries, but it's just that it's not a necessary, congruent, perfect fit for the individual and also the brand.
And what are the answers that they normally give?
Well,
Aside from the, I guess the monetary side is a huge upside for them.
Well, it's an incredibly lucrative market at the moment, and sponsorship fees and endorsement fees have gone up through the roof. I think 5-6 years ago, we were betting on the fact that Chinese celebrities from mainland China will continue to see an upside in appreciation in their values, and that's certainly turned out to be the case. In my previous companies, we used to sign a lot more Greater China artists from Hong Kong and Taiwan, but much more so today, you're seeing more and more local celebrities from mainland China endorsing bigger and bigger brands.
It's interesting, though, that you bring up the topic of supply and demand, because it seems like a trend that's very unique to China, that you have a increasingly smaller pool of go-to celebrities that, as you mentioned, end up endorsing everything from insurance to potato chips to cars. And do you think the brands are not yet catching on to the fact that consumers are savvier now than perhaps they were 5 to 10 years ago, and they were perhaps willing to buy that the celebrity actually endorsed these things, and nowadays the consumer is really thinking, oh, this celebrity is actually selling out?
Well, the old thesis was about anything that would generate awareness or interest or that extra couple of more seconds of attention would be effective. I think going forward, it's going to be a lot more about building the brand. I think going forward, the consumers are going to be asking, you know, do I really believe that this really is the right fit? And do I aspire to be that individual, and that's that product?
And talking about that community building and that real grassroots brand building. Obviously, you've recently joined the Sino Weibo community.
I'm old school.
And have already built up a fast community, fast-growing community. But why did you pick that platform rather than Weixin? And you're on both, but is there one that you focus on more now?
Well, I've recently joined as a voice on this application, but I've been monitoring and tracking it for many, many years because I think it's important to be part of the conversation. My mode of communication at the moment, what I say to my office is that my order of priority as far as communication tools are concerned is that probably the slowest response time you'll get from me is email, and then the next thing would be an SMS, and then now a Weixin. And then if it's really, really urgent, you would call me.
And Weibo fits in where in that?
Weibo for me is a longer term, less regular conversation medium.
And from your perspective, when you look at Weibo versus Weixin, on our show we've talked about sort of their competing and converging paths. In your perspective, where do you see this moving forward? Do you really see it as a battle where there will be one winner, or do you see them coexisting?
I think they will coexist. I think there will be multiple channels of communication used differently.
Harry, thanks for being on Thoughtful China. That wraps it up for today. Be sure to subscribe to us on Tudo and YouTube. You can also follow us on Weibo and Twitter and join our LinkedIn group. See you again.